Let's very quickly check in on Wall Street, where you are continuing to see those losses that the street started out with at the start of trade. So the Dow Jones Industrial Average on your screen is down about 0.2%. The Nasdaq Composite Index flat really. Now, as we mentioned, the big trigger that's actually taken the street down today is the jobless claims report, which has printed in at a level of 10,000 jobless claims more than what economists were expecting. Also the fact that yesterday you saw a very strong rally on the street post the fiscal cliff deal getting struck. So you saw 2% gains on Wall Street. Some amount of profit booking playing out on the street as well. So both of those factors are really dragging the street down. But on the fiscal cliff front, ratings agency Moody's has said that the US will have to do a lot more in order to maintain its AAA rating. This comment comes after US lawmakers narrowly averted falling off the fiscal cliff. The agency has said that the deal does not provide a basis for meaningful improvement in the government's debt ratios over the medium term. Moody's has currently assigned a negative outlook on the US economy, and another ratings agency, that's Standard & Poor's, has said that the deal does not affect its negative view of the US credit outlook and said that more work remains ahead for policymakers.
And going across to the European markets, which traded mixed as investors really booked profits on the recent rally and also over concerns about the US debt ceiling. We have with us Kimberly Lim, who joins us from London with the wrap on the European markets today. Kim, over to you.
Well, we're not seeing the numbers we saw yesterday. Certainly some pullback around Europe as we see profit taking. The FTSE Eurofirst 300, though, still slightly higher. Swiss stocks are making up gains for the most part as Zurich's stock exchange gets back from the holidays. Luxury goods group Richemont leading the rally there. Now, here in London, certainly a cooler performance on the FTSE 100 after it smashed that 6,000 level yesterday for the first time in 17 months. Now, retailer Next is making a strong splash there. It's up more than 2% right now after the British company nudged up its full-year profit forecast. On the flip side, though, miners, which did so well in the previous session, are running into profit-taking. We're seeing the Stock 600 Basic Resources Index down around about 0.5%. Broadly seeing commodity stocks and banks lower. Some traders seeing the market somewhat overbought yesterday after those developments in the US on the fiscal cliff crisis. Now, in the short term, a lot of strategists expect to continue to see an overall bullish mood around the markets, but longer term there's no escaping the bigger budget battles stateside and of course ongoing problems in Europe, both factors weighing on sentiment.